Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. And we're back. So tell me about that hat you're wearing. What is Bellows? It says, I love Bellows. I
Yeah,
have a lot
so
of hats.
I have a ton of hats. So my good friends who are stationed in Italy, who don't listen to this podcast, but I'll give them a shout out anyway. They bought me this hat a few years ago, either for my birthday or something. But Bellows is a beach in Hawaii on the
Okay.
the Kaneohe side, I think is for those who are familiar with being stationed there in the military. So anyway, it's a great place. You stay in these like concrete, non-air conditioned, little huts right on the beach, and
Well, you don't
great.
need AC then, right? You got that ocean breeze.
you get the breeze. I mean, I need it to be cold as crap, but
Yeah, I like it
it's
cold.
yeah. But no, it's a great place, and that's Bellows. So
Okay, cool.
Yep.
I didn't know that. All right, learn something new every day.
and this shirt has little lobsters on it, totally
Yeah.
unrelated.
Yeah, it's making me hungry though.
Yeah.
Thinking about lobster now. Well, nice, man. It is gorgeous here, finally. I think we turned the corner.
Yay. Well, it
Yeah.
is May.
I know. It's like mid-May. It should be nice.
Yeah, it's hot here today too. It's 81, and it's humid. It's like 80% humidity or something.
Yeah. Yeah, I could do without that.
Yep.
Yeah. Well, all right, man. We got a good topic today, but first, let's get to a question we had come in from a listener who is actually also a fellow A-10 pilot that I flew with, I believe, in Korea back in the day. He says, hey, before I read Nelson Nash, before I started listening to you two, and before I started my own banking system, I established a HELOC. Initially, I was going to use that loan for a major house renovation, but now I'm using my own bank. I've established 2 policies for myself and am in the process of establishing policies for my family. Any great ideas on what I can do with the HELOC? Are there ways you can think of to use the HELOC to grow my own banking system? So, yeah, go with that. I know you've got some recent experience with the HELOC.
Yeah, I've had 2 of them for, I don't know, 6 years maybe, I guess. 29, no, maybe 5 years. I used to use them when I thought they were the best thing ever, and then once you discover dividend paying whole life in the process of the infinite banking concept, that becomes the best financial product ever that you can use as far as leverage. So now my HELOCs mainly just sit idle. If I have a transaction that I need to make and I need to just move some money fairly quickly, say for example, construction loan thing where they need another infusion of cash, and it'll take a few days for a policy loan to get there, so I just leverage the HELOC, send the money over, replenish it with a policy loan a few days later. So to me, my HELOCs are, they're, I think a lot of people's probably are low double-digit interest rates, and nobody's using them unless they're getting such a great return on whatever they're doing. But again, go back to Nelson Nash. One of his rules is don't do business with banks. By leveraging that HELOC, you're ceding control of capital, you're creating a repayment that's mandatory for yourself, and you're ceding control of the banking function. So I'm not a big fan of leveraging a HELOC, dumping it all into a policy as immediate PUA, taking a max policy loan and refunding it. I think that might work for some people, but we're never going to endorse or advise you to do that. So those are my thoughts. And there's other things to say about it, but generally speaking, I think you can kind of tell where I'm coming from. I like it as my kind of break glass. I need some cash, and they're there. So that's how I use mine now.
Yeah, and it can be nice if you have a lot of very active transactions, like when I was doing real estate, and I had to pay a contractor today, or I needed money for a deal right away. It's nice. It's quick. It's there. You can transfer it immediately. But it's not my go-to. I think it's a great hip pocket kind of thing, and it's not a bad thing to have a access to a HELOC, but the time to
Yes.
request that is when you absolutely 100% don't need it,
Right.
and then just
Yep.
let it sit. As long as you're not going to be tempted to dip into it to go buy a new boat or something, let it sit there for, like you said, break in case of emergency. So
Yeah. If it's usually, I've got primary, alternate, contingency, emergency, and then dash, like break glass. Like things have gone horribly wrong if I'm tapping that thing.
yeah, your pace
And that's-
plan has.
That's right. See what I did there?
Yeah. Yep. Very
But,
nice.
yeah.
So yeah, good question. Yeah, we don't. There's better things to use. So
Yes.
that's not under the control of the bank, which is kind of leads us into our topic for today. So we wanted to talk about policy loans versus bank loans. There's a big discussion especially back when you could get a loan from the bank at 2% or something. A lot of people were like, well, why in the world would I put my money into a policy and have to borrow against it at 5%? That doesn't make any sense. Well, we'll get to that. But how much sense does it make right now if you've got access to loans is double-digit interest, and access to policy loans is single-digit? Maybe now it makes sense, but hey, you didn't plan ahead, so you don't have that option.
That's right.
Yeah.
Yeah. There's another podcast out there where they had an episode about, collateralizing their cash value with a certain bank and doing, a secured line of credit that way. And now that those lines of credit the rates have gone way above, 3-4% above what a policy loan is. Now it's time to go back to policy loans. And same type of ease of transaction and whatever. I don't know. I try to run my system how I think Nelson intended, and I don't want anything to do with that.
Yeah.
Anyway, so
Having the control, there's definitely it really outweighs any supposed benefits from a lower interest rate.
yeah, I
my
think
opinion.
just convenience. That was the big theme: convenience, convenience, convenience. And
Yeah.
oh my goodness,
Yeah,
I don't know.
anything
I
that's
just-
convenient is going to come with a cost, which is, it's only convenient because there's a cost associated with it. Like anything, convenience store, you go to a convenience store, everything there costs more than if you actually
Right.
go out of your way to go to a grocery store or a department store. So, well, let's talk. There's a bunch of differences between bank loans and IBC loans. Just call them IBC loans. So when we say that, we're talking about taking a loan from the insurance company against your available cash value from your whole life insurance policy.
right?
So one is accessibility. So accessibility, when you need money, you go to a bank, you have to be approved. You got to go through their entire approval process, which you've been through lately. Pretty painful. Can be very painful.
Oh, it's an awful experience every time, and the more tax documents that your return contains, so you've got K-1s, 1099s, W-2s from multiple different things. Even the loan guy was like, "Oh, your return is just so much more complex than everybody else's that we generally deal with." And I'm like, "Yeah, I'm on my path to get away from that."
Yeah.
Where I'm just kind of like, I'm not doing any of that stuff anymore. It just makes everything more difficult. But yes, loan underwriting with a bank is a pain in the butt.
Yep. So how's that different when you need a loan and you go to your policy to take a loan? Do you have to go through an approval process?
No, and our clients know this, but I say this all the time. I can get a policy loan logging in on my phone. I can go on my computer here, and I can literally do it in less than 30 seconds.
Yeah. Yeah. The only reason it may take more is some companies may have a restriction on like anything over 50,000. You may actually have to fill out a piece of paper and email it in.
Right, one piece of paper. Yes. Yep.
Yeah.
But short of that, it's super easy, and oh my goodness, I
Yeah.
don't know.
And
Until
it's
you're doing
done.
it and you've done it, it's just phenomenal.
Right. If you know, you know.
Yep.
Yeah. Now, what about the reasons for the loan? So when you go to a bank, what's the first? I called a guy today because I want to get a personal loan because I've got a strategy I'm going to use with another, something else you're familiar with. But there's a great strategy that we can use with personal loans. So I called up my bank and just quickly asked the guy, "Hey, I've got a couple accounts there. I'm looking to see what I could get qualified for a personal loan." What do you think the very first thing he asked me was?
Yeah. What do you need it for?
What do you need it for? I wanted to say, "What's it matter, pal? I just want a personal loan." But no,
Yeah.
I have to have a reason. When you go to take a loan from your IBC policy, is there anywhere on that loan request form that says, "Why are you requesting this loan?"
Nope.
No, why? I mean,
Because they don't care.
they don't care. It doesn't matter.
And the reason they don't care is because you have a contract which says that, as Nelson would say, you're first in line. Capital must be put to work, must be put in motion. The life insurance company is either giving it to me or to you or to somebody else, or they're buying bonds or whatever they're doing with it. But the capital money must flow. And policy loans is one way in which a company puts money in motion.
Yeah, and it's a guaranteed profit for the company too.
Yeah, it
Because
sure
they're
is.
going to charge an interest rate.
Correct. Not to borrow your own money, by the way.
Right, because you're borrowing their money. That's
Correct.
That's the mechanics,
Right.
right? Where does
forget.
yours? I mean, yours is not a separate pile of money, but let's pretend it is. Yours remains there, doing what? Earning
Yep.
uninterrupted
it's earning-
compound growth.
Right.
Yep. Even as you leverage it and borrow the insurance company's money. So, what's the biggest factor for banks when approving a loan?
What's your ability to repay it?
Can you repay this loan?
Right.
So that matters. And a bank's
yeah.
going to look at everything, anything and everything. Even if they know from day one they're not going to approve the loan, they're still going to look at it because they want all that data. They want
They
all
sell
your
your
information. Yeah, that's valuable too. So they get paid for that. But they want to know, do you have the ability to repay this loan? So they look at everything, A to Z, credit score, all that. Does a insurance company care if you have the ability to repay the loan or not?
No, and kind of coming off the last we touched upon in the last, they don't care at all because the policy loan feature, the mathematics and all the math has been done and baked into the cost of whole life insurance, the cost of the policy, putting it in force, maintaining it, paying the people at the home office. So, the life insurance company knows, a few scenarios are possible. You're going to repay the loan. You're going to pay the interest on it maybe. Or eventually you're going to pass away and they'll use the death benefit, which is actually the collateral, to pay off the loan plus the interest that's accrued. And then your beneficiaries get the rest. So it's a great loan for you, great leverage for the client, the policy owner, and it's a great loan for the company as well. So
Yep, completely risk-free to the company.
that's right. Yep.
Yeah. So when you go to a bank, one of the biggest numbers they want to look at that every bank has access to is your credit score. Right? That's highly valuable unless, you're a Dave Ramsey follower and you believe you don't need a credit score.
Good luck with that one.
Good luck with that. Yeah, as long as you got the cash to pay for absolutely everything in life. Mm-hmm. So, but credit check, they're going to do a credit check. And oftentimes, even the soft hits, they could affect your credit score. Your credit
Yeah,
score goes
temporarily
down.
they certainly do. Yep.
Yeah. So,
Super annoying.
yeah, when you go to a life insurance company, have you even in your application for life insurance where you asked what your credit score was?
No.
No.
It's not
Doesn't matter.
it's not a question. The company when you go into underwriting may be checking. But
Yeah. I mean,
I think
they do ask if you've been through declared
bankruptcy, right?
in the last
7 years or whatever. Yeah.
Yep. So they want to make sure you have the ability to pay the premium, but not to repay any loans.
Right. the cost of acquisition for a mutual life insurance company on a whole life product is many, many years. So yeah, they want to make sure that the premium that you've decided to pay contractually is going to be there.
Yeah. Yep. Good. So what about, there's this little thing called the debt to income ratio. Kind of a big deal with banks when they're looking at, do you have the ability to repay this money? So, and anytime you get a new loan from a bank, that is debt. We know it's not income because it's not taxed. So it's 100% debt. That affects your debt to income ratio. So that limits how much you have the ability to borrow, what kind of terms you can borrow money at in the future, all of that stuff. Now, when it comes to IBC, borrowing against your policy values, say you take out, say I have $100,000 of cash value and I take out a $100,000 loan. Does that affect my debt to income at all?
No, not at all.
No, not on
It's
paper.
not. No, it's in fact, if you deposit that money somewhere, it's going to make you look a little bit better, isn't it? Or maybe you're
Right.
eliminating some commercial debt with it. We have a listener actually that is not a client yet, but we've talked several times, and he is, in the process of doing things like that, where he's taking money that's not on the credit report and trading out commercial debt with it, so that his debt to income ratio looks better.
Yeah.
So, in other words, he's gaining control slowly over the banking function.
Yep. By first putting his money into a policy and then leveraging against that cash value to pay off some debt
That's
to
right.
decrease that ratio. Yeah.
Yep.
There you go. So don't ever feel like, because a lot of people have this mentality that I don't want to take a loan. I don't, loan equals bad.
Right.
And equals
We've talked
debt.
about that, right?
We have. Yeah.
Even
so it's
Nelson
getting
put it in
over
the
that.
book, like people hear the word loan and their brain shuts down or whatever, and
Yeah.
they don't realize that a policy loan is a completely different animal than your typical commercial bank loan.
Yeah.
It's totally different. They're unrelated, really. They're
Yeah.
very different.
And I think we're making the point here with several more points to go.
Lots of points.
Yeah. So when you go to get a loan from the bank, where's the bank getting that money?
They're likely getting it from you.
Yeah, right. They're taking your money and loaning it back to you. Yeah.
With no reserve ratio whatsoever. So anyway.
Yeah.
Yeah,
And
so
where
they're
else do
lending
they-
depositors money on deposit gets loaned out.
Yeah.
And it gets inflated, of course, right? Fractional reserve lending. You've heard us talk about that on this podcast, where the bank, let's just use a 10% reserve ratio, can, you deposit 1,000, they can lend out 10,000. Be great. Insurance companies cannot do that, right, Dave? They do not, they don't have the ability to print money, right?
They don't have the
So-
ability to participate in fractional reserve lending,
Correct.
where they're basically getting credit from the Fed or being able to loan out. When Paul says you put $1,000 in there, it allows them to loan out 10,000. Really, what it does is over the course of the life of that loan, creates $10,000 of new cash. I guess
Right.
maybe
Just in that
9,000
single
of new
loan.
cash. Yeah, that single loan.
And then it goes many times over as this person puts it in that bank, this person puts the next loan in this,
'cause
and it
you
just
put $1,000 in, they loan out 900 to Joe. Joe deposits that 900 in his bank to use for something. His bank now loans out $810 to Jack, and then on down the line until all of a sudden it's multiplied
over
by
and
10x.
over and
Yeah.
over.
So read how privatized banking really works
Sure.
if you want a really good overview of fractional reserve banking.
Yeah, that's a good overview. It's that was a good eye opener for a lot of our clients and ourselves early on in our journeys. But it's unbelievable when you think about it.
Yeah. Yep.
And it is
it
the source
explains a
of
lot.
our woes.
It explains a lot. Yeah.
Yes.
All right, here's the biggest hang up. At least it was until recently. Right?
Not anymore.
Not anymore. I mean, since 2008, 2009, interest rates were like almost nothing at commercial banks, right? because they were artificially low. So in an artificially low environment, what's the difference in interest rates between a commercial bank and a life insurance company?
Well, let's see, at its worst, if you want to just compare like a 30-year mortgage from 2021, like the one I have, right, 2.75.
Yeah.
That's 2.25 points lower, or interest points lower than my policy loan at the time, which I could get to 5%.
Yeah.
Right. So, and that was the big argument. That was a big hang up for a lot of people.
Yeah.
Early in our businesses was, well, I can get the money at, why would I do this? And of course, it's just a lack of understanding. And we didn't, Nelson says this is not about interest rates. They go up, they go down. The process, this is about banking, right? The process of banking continues no matter what. So it's just a misunderstanding. And a lot of people like to get into the numbers and this and that. And by all means, the banker can do whatever he wants. If you want to go source a personal loan or a mortgage or a car loan from your commercial bank, your credit union, and you can get better terms, better terms like without a repayment schedule. I don't know. Do you have that? No, you don't. So there's different attributes into just kind of what is more important to you, and ignoring the volume of interest that's going to a commercial bank as well. Let's not forget about, the volume of interest over your lifetime is tremendous that you're paying to people's banks that, other people's banks that you don't own, right? And that don't pay you much interest or dividends, and can demand the money at any time.
Yeah.
To pay it in full, right? They can call the note. Doesn't happen much, but it can.
Yeah. Right. And I think you're even getting ahead of where we are because we're not even on that.
Yeah.
That's a completely new one. So get back on track. But anyway, so with the life insurance company, though, they're fairly, comparable. But yeah, you could say in the low interest rate environment of, about 10 or 12 years of low interest rates environment up until the last couple of years. They looked a lot higher because maybe they were twice as much. Instead of 2.5%, it was 5%.
Right.
Well, like you said, and like Nelson said, interest rates go up, they go down, but the process of banking continues. Now, today, when you're saying, somebody getting access to a HELOC or something, it's double digits.
Oh, yeah.
Our loans are contractually guaranteed to not exceed 8% interest with certain companies. Every company may be a little bit different, but one that we primarily use, 8% it's in the contract. They can't charge more than 8%. Even if loans go up to 15% on the commercial side. Guess what we have money at? We got access to capital at 8% max.
Right. And again, going back to Nelson Nash, when the infinite banking concept was born, when he was on his knees in the early 80s at 23% on $500,000 or whatever it was. And then he realized I could get to money from all these policies that I own at 8%, even then. And prime was 21.5. So it's tremendous. So it's kind of that, missing the forest for the trees, right? Like, you have to focus on what's important and really it has to click but again, for most people, Dave, it's just like they see lower number better, or, for cash value, bigger number earlier better, whatever. And it's more nuanced than that, right?
Right. Which is why we're covering all of these different topics. It's not just about interest rates, just like,
right.
A lot of financial entertainers like to focus on one single number.
Yeah. I don't care what the policy loan rate is. I literally don't care.
I don't care because of all these other advantages. Because everything we're talking about here, IBC has an advantage over the commercial banks.
No question.
The only thing so far is the interest rate. The interest rate might be higher on your loan from an insurance company than it is from a commercial bank. Maybe. And depending on what that is that you want the loan for.
Yeah, and the other piece is like I'm paying interest against a policy loan back to an insurance company that I'm part owner of that's going to pay a dividend, that's guaranteeing the collateral, right? Like all these other things that are just going on the side that we can't forget about, which matter.
Yeah.
So.
Yep.
Thanks for listening. This is going to be a 2-part series. This was part 1 of, bank loans versus policy loans. Dave and I really do a I think, a good compare and contrast of, generally how bank loans are just terrible because you have no control, right, over the repayment schedule or the terms or the collateral, any of those things. And of course, policy loans are the complete opposite. So anyway, be prepared for part 2 next week. It'll be back-to-back week episodes that'll come out. So we cover more ground on the rest of this topic. And until then,
same time, same channel, and same outfits because we're doing this on the same day. All right. Until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.